Hello everyone, it's the Cowboy. Welcome to another edition of Bitcoin and Ethereum Elliott wave analysis. Let's get right onto it. It's been a couple of weeks since our last presentation. Let me just begin with just a small introduction here. This is places where you can find us on Twitter at Elliott Wave Cafe. On Telegram here, you can go. We have a public channel and then also a public chat room where you guys can come in and chat and ask me any questions you have about my charts or about what I think about the crypto markets overall. And then there's a premium channel that I have all the way at the bottom here. The link, it's in the YouTube here right below the video. All right, let's begin and take a look. So on the weekly charts, this is kind of our regular standard outlook as we begin. And I'm thinking we have started a fourth wave decline. So overall, we're still looking into a higher progression in here in this larger cycle third wave. And, based on this count in here, we're going from these lows, 1, 2, I think we have finished this larger third wave, and we are now in this fourth wave that it's going to move kind of sideways in here, possibly in a triangle formation. There's a couple of scenarios that I have on here, but for right now, this is the overall outlook. Pending the termination of this corrective pattern in here, then we're looking for some higher targets where this let me just kind of get my marker, where this wave 5 in here, it would travel about 61% of wave 1. It would be at about 83,350. So that's the minimum upside target that I would look for this wave 5. 100% of this wave 1 comes in at about 120,000. And I also have a cluster where wave 5 on a distance travel from wave 1 through wave 3 goes in at about 128,000. So for this fifth wave that's going to start once this wave 4 is over, for it to travel, I have a cluster of fib projections here that start between 83,000 and about 128,000 zone where this wave 5 should terminate. Now this larger cycle third wave, right, this wave that starts back at the lows here, ideally you would want to see it. We have passed that 1618, which was somewhere up into these levels, and the next important level is 261.8 multiple of this wave 1 that goes in at about 186,000, if you can see it on that chart. So I still remain bullish and constructive Bitcoin pending a corrective pattern that we have up here in this fourth wave. So going from a 1 week chart here to a 2-day chart, you can see this a little bit more in detail. I've also projected a little bit of a time travel in the 1618. We are slowly approaching 100% of distance travel in wave 4 compared with wave 2. Based on this type of subdivision in here. So I'll show you a little bit later in the presentation where we are in terms of seasonality, but if the month of March is more of a corrective month, more of a bearish month for the crypto land in general, it might take us until, let's say, the first week of April before this whole thing is over, and then we can start the next advance again towards 83,000, 120, and possibly even 128 as we're finishing this corrective pattern and then moving further up to the upside. So you can see in here, right, my subdivisions are in a 1, 2, then you have 1, 2, 3, 4, 5, completed third wave in here and this fourth wave. Now I'll show you a couple of other counts. There are a little bit alternates. I consider this kind of my preferred interpretation, just the way I have this larger third of a third wave in here, right? So I prefer to go in a 1, 2, 1, 2 rather than what I have into the blue count, where I actually start with a wave 1 from these lows, finishes up in here, goes down in a second, and then you have a 1, 2, 3, 4, 5. So under both scenarios, you can see that we're still developing a fourth wave at different degrees of trend, but it would still require us to move higher one more time before we start possibly a larger correction, right? We'll take it one step at a time. We don't know what's going to happen once we get up here. All we know for right now is that we're at around 48,000 zone, and this is what I'm reading on here, right? So this can take several shapes in here. You can get a zigzag, right? You can get a complex correction. You can get a triangle. Anything can happen anywhere between, let's say, these levels and up here at about 28,000. So I'm looking for this fourth wave to continue to correct. It doesn't have to come, as far down as I have it on these levels, but if it is based on the interpretation of a fourth wave corrective, distance, they usually come to the fourth wave of a lesser degree, and that's all the way down here, anywhere between 32,000 and 28,000. This depends on where you place this fourth wave, right? So it can come all the way down here and then continue to push higher. Now the problem that I have with that is that this fourth wave will become quite a little bit disproportionate with the second, so I really don't want this to travel too much in time compared with that second wave. Another count that I have in here, which is a little bit challenging, it's the green count, where I'm actually looking at a possibility of this explosion after this consolidation here from 2019 all the way to March 2020, and then you kind of pushed out of here in a wave one. So this is kind of how I'm trying to prepare myself in case this correction gets a little bit deeper and we've actually reached more of an important top in Bitcoin, for a while, let's say for the next at least, 4, 5 to 6 months. And that would be a possibility of a fourth wave formation like that, right? And then you go in an A, B, C, D, and E with a very small and awkward E wave that I have on here. And then you break out of here in this wave one, you do a 2, and then you have a small subdivisions here in a 1, 2, 3, 4 with a more of an extended fifth. That completes a third, and you have a fourth, and you have a fifth. And this way you kind of get out of here in a wave one. Now, there is a way to count this without necessarily having a triangle. So if you don't like the formation, that I have in here in terms of this triangle, you can very easily just go wave 1, wave 2, wave 1, 2, 3, 4, 5 for 3. That's your 4, and that's your 5. And you still complete a larger degree wave 1 as you're coming out of this fourth wave. And, I think it's premature to call, a finished cycle fifth wave in here, right? Just based on the previous history of Bitcoin and the way if you go and look at the, larger weekly charts, you can see that this fifth wave would be extremely small. So I think if it is a fifth wave, it needs to be wave 1 of this 5, and that would be this, right? And that would call for a correction. So under both scenarios, either triangle or a move out of here in an impulse, you would be looking for a second wave. Now, just on a basic fib retracement level, a 38% gets us at about 28%, 28,800, and a 618 gets you back at about 18,000. So if this is a major top and we're actually starting a second wave correction for the next, let's say, 4, 5, 6 months, that can take us all the way back here. The first support is this fourth wave, which is about 30K, and then the next one down here, it's about 618. You can see a small cluster in here, and the move can travel all the way down there. So keep these targets in mind if Bitcoin decides that it's time to correct lower. Okay, let's go and take a look at the next slide that I have on here, and these are the moving averages. We continue to remain in a very nice bullish uptrend. You can see just based on the distance that we've had in this larger decline, we're somewhere just kind of starting it, right? Like back in here, this would need to be a little bit more just to even match whatever happened between 2015 to 2018. And the 21-week moving averages continues to point nicely up, followed by the 50 and the 200. These are the levels at about 30,000. It's that support, kind of coincides with that fourth wave. So if it really wants to come down, this would be where more of a longer term players will start to step in. People that don't really care what happens, let's say on daily basis, even on a weekly basis, they look at the more of monthly charts and larger time frames. And if you want to accumulate for a move, let's say all the way up higher to, let's say 500,000 in Bitcoin, 30,000 a move down here, it doesn't mean much. You're talking, people that want to kind of put in millions of dollars, and those institutional investors. And if you want to kind of step in with them, this would be the levels that they kind of accumulate at. And then you have 16,000 for the 50-week moving average, and then all the way down here is the much longer term. And some of the stuff kind of matches that kind of stock to flow ratios that people show on the other charts as well. So this is where you kind of get value and then much larger upbursts into the price, and that's at this moment, this is at right below $10,000, about 9,500. All right, so that's on the weekly charts, and take a look at the dailies. And here, I keep looking at this percentage moves, distance traveled from the 200-day moving average. Right now, that is at about 23,263. You can see it on here. And, every time you kind of get above 160, 170% distance travel from the moving averages, you can start to expect a little bit of a pullback in here. So you can see what happened, from 160 in here, 127, 277. I've talked about this in previous videos as well, but, the price doesn't really get much above that 200% before it starts to get really extended, and you can expect pullbacks. You can also notice in here, right, that we have this divergence between this high and this high, and you have a little bit of an RSI in here, right? So as this kind of drops, as price was making new highs, this kind of tells you that, yeah, you are in a possible fifth wave, and you can kind of correct lower a little bit. So right now, this divergence is kind of sorting itself out as we're kind of extending in time. All right, so that's on the moving averages, and I wanted to talk to you a little bit about the candlestick patterns in here as well. So with the close of the last week, that was pretty bearish. We are finding ourselves in a very interesting bearish formation, and that is a bearish engulfing. They're extremely powerful on the upside when you have a bullish engulfing, but they could be powerful to the downside as well. Now we are in a in an uptrend, so the momentum is towards the bulls. So this has to kind of prove itself that it's the correct reversal pattern, and it needs to prove it by continuing selling off here in the following weeks. The good news is that this week we haven't really sold off too much, and we're kind of trying to close above it. I'm watching the smaller time frames in there to see where we're going to close the week, and what's that's going to mean for the for the future development in there. But it's a small caution sign that something could be happening in Bitcoin as I'm looking at that pattern, right? It's kind of starts to confirm the overall idea of a fifth wave, right, with the divergence, with also the bearish engulfing. So my sensors are starting to flash. You can see that you've had a similar pattern in here, back in when we hit the top in December of 2017. And then, that was followed by a pretty drawn out correction in here for almost the entirety of the 2018. I'm not saying that's what's going to happen here, but, it's an early indication that something, could be happening. Now, if this following week, we're turning and we're breaking up higher here, right, that means that this pattern gets invalidated, and that's actually a very bullish sign. So it matters what happens here in the month of March and how we're able to close. If we're getting something like that, right, and we're starting to get bearish in this manner, then I'm gonna put a lot more importance into this bearish reversal pattern. So that's a little bit of an outlook on there. And let's take a look at something else that's interesting. And this is more of a time analysis of Bitcoin as I'm measuring some fib projections in time where we kind of are in this larger third wave advance. And let me get my marker, and then you can see that I have. So what I'm measuring in here, I'm measuring the distance traveled in this wave 3, or this wave up in here, right, compare with this wave 1. So you can see that we are just crossed 100%. So this wave 3 now traveled exactly, 161% of this wave 1. So very nice kind of golden ratio in time. And just shortly after we've hit this ratio, we're starting to sell off. So this is another indication that, the fib works in time, and it works in price, and it's important overall in nature and everywhere. And the markets are kind of showing you, what happens once you hit this golden ratios. All right, the next one that I have, there's a 200% distance traveled, which I don't have the date on that. Well, actually I do. It's April 18th. Right, so we had January 29th for the 1618, and then we have April 18th for 200%. A little bit higher up here, I have the distance traveled between wave 1 and wave 2. So this whole time frame that I have here, I kind of measure it from there, and then I would have about 100% will come in June 13. Right, so this is kind of my next projection that I'm watching in terms of distance traveled if this move continues higher in here to reach more of an important top for this larger third wave. Remember, overall, if you're looking at the 2618, which comes at about 180,000 or something, right? If this kind of continues to travel and gets more to the upside in here, right, like that, it would have to be quite aggressive to get all the way up there, by the time you hit June 13th. But, you've got the month of, let's say the month of April, April, May, and then June. So you're 3 months of really aggressive price action to get us all the way up there. We'll see if that happens, but these are just some kind of, time projections that you can kind of keep in mind. For right now, this one here, it's pretty important as well. So let's continue to look a little bit of the seasonality as well in Bitcoin. And you have, this is a monthly kind of performance percentage, and this is for the month of March, right? I can do this for every single month. If you guys want to know more about this, you can visit me, and I can let you know what happens, let's say in the month of April and further down the line. But in the month of March, you can see through this kind of blue line that I have on here in average, right? It's a pretty beat up price and percentage returns for Bitcoin into the month of March. There are a few years in here. I mean, you can see maybe 2014 and 2015 where you've had at least for the, let's say, the first 20 days of the month where Bitcoin was performing pretty well in here. But overall, most of the years kind of going back to 2014 were negative. And if I kind of dive down in here to the actual days, you can see that you have some positive returns here for the first week of March, and then you kind of start to turn back and go negative in here. So this is kind of on the bearish camp, and they'll probably be pretty happy to kind of see this for the rest of the month. We'll see though. We'll see what's going to happen. But this is just in terms of looking back this 6-7 years. All right, let's take a look at Ethereum, guys. And Ethereum, it continues to look pretty good. I mean, this is obviously a very long time frame here. You're looking since 2012, and we've broken these important levels at 1420. And we're coming back and just kind of toying with that zone at the moment, right? We're just slightly above it. And, obviously it provided resistance on the way up, and now it provides support on the way down. And this is probably all it's going to be. If this is just a retest of it, then we're looking for this thing to turn from here and continue to push higher. Overall, we're looking, this progression to continue. I don't think it's completed yet. It doesn't look, I think it's a little bit better positioned than Bitcoin in terms of where we are in the sequence. So even if you're looking at a 1, 2, 1, 2, 3, 4, and 5, 4, and 5, there are still subdivisions. If you're looking at a 1, 2, 3, 4, and 5, we still got to go up higher, and those targets are at about 3,700 to at about $4,900 in Ethereum. So I continue to remain bullish on both these subdivisions, both this wave. Let's take a look a little bit lower in here on the 2-day chart, and where I'm just kind of trying to subdivide the sequence so you can see 1, 2, 1, 2, 1, 2, larger third of a third in here. You can see the subdivisions as well, right? Just a 1, 2, 3, some kind of a triangle in 4 in here to push up in 5, and you're done in this third wave. And what's happening right now, we're working this fourth wave, and you can see that on the sell-off, it came to the fourth wave of a previous degree. That's 1271. Right, that's where kind of this triangle fourth wave finished, and since then we bounced back. So this will take a little bit of time in here. You really don't want it to go too much compared with the distance travelers in this wave second. So maybe again it's just for the month of March. We're going to get a little bit of a triangle in here, followed by the next push up higher. So I'm looking for this to continue, possibly. I mean, we might not get all the way to the 1618 in here, just in the look of this wave one, but it's it's possible. 1, 2, 3, so at least above 2000, maybe 2500, it would be a move that we're going to get out of this once this fourth wave triangle finishes. I've also placed a couple of fib levels in there. You can see the 38%, which is very close to that fourth wave low, comes in at about 1195. So if he wants to correct a little bit lower, that would be a level to do so. Fourth waves, love returning to the 38% of that third wave. If you're getting into the 50 and the 618, things start to look a little bit more dangerous, and then I would possibly look at this third wave being complete up into these levels. That would change my count to a 1, 2, 3, and then you're doing that fourth wave, but you still got to get up higher for one more move before you begin the larger decline, which would be this wave 4 once you finish the sequence, right? It will kind of go like that. So, overall for the rest of the year, a little bit of volatility, a little bit of a corrective moves in here in this kind of fourth wave. The markets need to digest. I mean, we've had a pretty amazing rise, right, in price. I mean, this is, gosh, you moved from $100 in here to almost 2,000, right? So come on, it's been a good ride. The markets deserve a break. Let's take a look next at what I have in here, and these are the moving averages. Similarly, like in Bitcoin, we continue to look higher here on the weekly. The 21 week, it's at about 1,049, so that would be a pretty good support. You can see how markets respect this as they're kind of moving higher into an uptrend. And then you have the 50 at 530 and the 200 week, the major one, at about $372. So it looks nice and bullish. It's turning just slightly in here, which is good. But I think it will provide a good support in case we're selling off a little bit low. And then, here is another projection in here, right? And if you can see, similar story like in Bitcoin, the moment you start to move about 180%, you're kind of starting to correct. I don't have the other measurements from here, but they're very, very similar. So if you do that, you can see that they're kind of matching there in terms of distance traveled, and then you're getting those little pullbacks. If you look at the moving averages in here, we're below the 20-day moving average. We're slightly at the 50 as well. You've had these little dips as the market was kind of building the uptrend momentum. So it's very possible that even if you're going to push a little bit sideways in here, you can actually turn and continue to move higher, and then this 50 follows along. If you're going to come up, your next defense on the 200-day, it's at about 770. But we'll see if we're going to get all the way down there. I think this will get defended down the line here. So we'll see, and we'll see what happens in the month of March. All right, let me take a quick look here also at a little bit of the rotation and the strength, just really briefly about what happens here against the US dollar. So I have the benchmark, which is the center in here. It's the US dollar, it's the dollar index, and you can see in here this is a weekly performance and this is a daily. On the weekly charts, we're losing a little bit of a momentum because we're still in the green quadrant. That means that we're still in an uptrend, so we're still beating the dollar index pretty well on these cryptos, but we're starting to lose a little bit of a momentum. And you can see that the dollar index raised a little bit for the past couple of weeks in there, and this is also reflected in the crypto markets. On the daily charts, we are actually weakening in Bitcoin, and we are actually lagging in Ethereum. So just based on that seasonality and based on what I'm seeing here on the rotation graphs, I'm not expecting this thing to kind of turn right away and push up higher. It needs to kind of work itself out. It needs to get back out of here, push back up here into the improving quadrant, and then go back and lead again, right? So this whole cycle, right, can take a couple of weeks to unfold. So, we continue to watch it. We continue to keep an eye on it. For more information on that, daily on my daily explanation, come and visit us into that pro room. Even in the public room, I try to share some information. I'm trying to be fair to my clients and not share too much, but I can kind of keep you up to date on this stuff if you come and visit us up there into that pro room, and even to the public one as well. So on to the this is the performance charts, right? So for the last 10 years, Bitcoin continues to outperform Ethereum. So it's kind of kicking its butt. And, even on this correction, you can see that actually, right, Bitcoin pushed lower a little bit. So it corrected a little bit more than Bitcoin, than Ethereum did. But in terms of overall performance over the last 10 years, Bitcoin, it's largely outperforming Ethereum. So this is just something interesting to see where we are in the sequence. We're thinking that, as Ethereum gets better and the protocol, gets improved and more people use the network, this will kind of catch up to Bitcoin in time. And then on the last 5 years here, we're basically, pretty much equal. Bitcoin used to, actually Ethereum, right, actually outperforming here for a little bit, and then Bitcoin kind of caught up to it, and now we're basically near kind of on top of each other right there. All right, so this is it for today, guys. I mean, here is my presentation. This is the menu that I have in my cafe. Besides having good coffees each morning, we talk all these markets, not just crypto. We talk about alt. We talk about the S&P 500, the equity markets. I talk about interest rates. I talk about gold, oil, the dollar index. I talk about the forex markets. Right? We try to look at the markets to a macro perspective because it gives you a really good understanding of where you are in the cycles. If you don't make money in the crypto market, there's plenty of other trends that are developing out there. Right? You can look at the emerging markets. We are deep into energy. We are deep into the financial sector right now in the stock market. Right, so there's plenty of places because you can take the Elliott wave principle, the structures, the way you think about the markets, and you can extrapolate that to a lot of other markets, and you get better as a trader, you can get better as a macro thinker, and you can shift between assets. You can have different portfolios, and you can move your money around to continue to profit by using, let's say, Elliott wave as a primary analysis tool, and then incorporating some of the other stuff like moving averages and RSI and a lot of other things, right? Some fundamental data that it kind of helps you and guides you into becoming better at what you do. And we offer that every single day through my videos and to my presentations into the pro room. And then my course, it's a pretty interesting and nice course if you don't know nothing about the Elliott wave, or even if you're just a beginner. This kind of walks you through a lot of details and the way I look at it, and you can kind of start at the at the chapter 1 and get it all the way to 10 and really dive in and learn about what goes beyond the scenes into the Elliott wave principle, and how you actually get to some of the conclusions that I get, and how you get to those FIB projections, how you look at the counts and everything. It's in there, right? So you can kind of combine that with the videos and presentations, and that can help you speed up your learning curve. So anyway, thanks again for watching, and guys, don't forget to hit the thumbs up button. I know I talk about that just the way at the end of the video here, but let's just kind of rise this content. Let's share this up to more traders so everybody can. I think Elliott wave is a pretty nice tool and can get you to a good place in your trading career. So let's kind of share this video, and don't forget to subscribe and like, and I'll see you in a couple of weeks. Thanks. Bye.